Ever feel like the market is kind of like messing with you, like it's playing these mind games?
Yeah.
Turns out it kind of is.
Yeah.
So today we're diving into this whole world of investing psychology with Denise Shull's book, Market Mind Games.
Okay.
And we're going to unpack how our emotions and beliefs really shape our decisions, whether we know it or not.
Yeah.
It's really fascinating stuff. Did you know that even like seasoned traders, people who've been doing this forever, they sometimes make decisions just based on gut feeling
Right.
rather than cold, hard data?
That's right. And Shull, she really drives this point home with this anecdote about 150 floor traders
Wow.
at the Chicago Mercantile Exchange. And they were frozen for over an hour, like unable to make a decision.
Oh, wow.
It really highlights how psychology, like even for seasoned professionals, it plays a role.
That's wild. 150 traders just stopped.
Yeah.
What was going on in their heads?
Well, that leads us to Shull's first key point, the limitations of numbers. We often think about the market as like purely rational, driven by probabilities and algorithms, but that's only part of the picture.
Yeah, that reminds me of the 2008 crisis.
Right.
All those bankers, they thought they had risk all figured out
Yeah.
with their fancy models.
All the models.
And we all saw how that turned out.
Mm.
So how can we as like individual investors avoid falling into that same trap of thinking numbers tell the whole story?
That's a great question. Numbers are important, but they're not everything.
Right.
We need to remember that markets are ultimately driven by like human perception.
Okay.
Every price reflects the collective judgment of everyone participating like at that moment.
So it's less about the data itself and more about how everyone is like interpreting that data.
Exactly. Shull, she points to John Maynard Keynes, who famously compared it to a beauty contest where winning depends not on your own judgment,
Right.
but on predicting what everyone else will think.
I love that analogy. It makes me think of that story Shell tells about the 1930s newspaper beauty contest.
Yeah.
Readers had to pick the most attractive faces, but the winner wasn't objectively the most beautiful.
Right.
It was whoever best predicted who the average reader would choose.
Exactly.
Wow.
It's all about understanding the prevailing sentiment and bringing this back to you, the listener. It means being aware of your own biases
Right.
and beliefs and how they might be shaping your perception of the market.
So we need to be aware of our own biases.
Mm-hmm.
But how do we account for everyone else's? It seems like a lot to juggle.
That's where understanding context becomes crucial. Numbers have no inherent meaning without it.
Okay.
For instance, like the Dow Jones at 10,000.
Yeah.
It means nothing unless you understand the historical trends, the current economic conditions, and the overall market sentiment.
It's like Michael Kelly's realization in the book.
Right.
He understood that a market level, like it only makes sense within a framework of understanding.
Right. And that raises a crucial question for all of us. What's the context influencing the market's perception right now?
Yeah.
What events or news stories are shaping how people make decisions?
Okay, I'm starting to see how numbers and context fit together, but what about our, like, gut feelings? It seems like Scholl is saying that our emotions are just as important as data.
She is. Shull calls it feelings as data.
Okay.
We can't make judgments, especially in uncertain situations like the market, without some, like, emotional component. Instead of trying to suppress our emotions, we should learn to recognize them and analyze them.
So instead of ignoring my gut feeling, I should be paying attention to it.
Exactly.
Yeah.
Your gut feeling might be signaling something important that you haven't consciously processed yet.
Wow.
Could even give you an edge in the market.
Okay, this feelings as data
Yeah.
idea is really interesting, but it also seems a bit tricky. How do we know if our emotions are, like, leading us astray or if they're actually valuable signals?
That's a great question, and one we'll definitely unpack further. But before we do, let's recap what we've learned so far. We've seen how numbers alone don't tell the whole story, how perception and context shape the market's movements, and how even our emotions can be valuable sources of information.
This is already making me rethink how I approach investing. It's all about understanding the human element, both in ourselves and in the market as a whole. But I'm eager to hear more about how to actually put this feelings as data concept into practice. It's coming up in part 2.
In part 2, we'll dive deeper into the practical applications of feelings as data. We'll explore how our beliefs influence our market views and discuss techniques for identifying and managing our emotional responses to market events.
Welcome back. We're continuing our deep dive into market mind games.
Okay.
And I'm really excited to explore this feelings as data concept further.
Yeah.
It's such a different way of thinking about emotions in investing.
It really is a game changer. Shull, she points out that we often try to make decisions like as rationally as possible,
Right.
but even the most logical thinkers rely on a belief system
Okay.
to navigate the world, especially when it comes to something as complex as the market.
Okay, I see that. Beliefs kind of act like filters, helping us make sense of all the information out there.
Mm.
But how does this like play out in investing?
Think of it this way. Two investors could look at the same chart,
Okay.
but their beliefs about the market will influence how they interpret the data.
Well,
If you believe the market is going up, you might see buying opportunities,
okay.
while someone who believes the market is going down might see the same chart as a signal to sell.
Oh, wow.
Yeah.
So it's like those optical illusions where the same image can look completely different depending on your perspective.
Exactly. And that's where the real edge in investing lies. It's not just about having the best data. It's about understanding how your beliefs might be shaping your interpretation of that data.
So step one is to like identify those beliefs, but how
Yeah.
do we do that? They're often so ingrained that we don't even realize they're there.
Right. Shull, she suggests paying close attention to your emotional reactions
Okay.
to market events.
Right.
Your feelings can offer clues about your underlying beliefs.
Yeah.
For instance, if you feel this surge of anxiety
Right.
every time the market dips, that might suggest a belief that market downturns are like inherently dangerous.
So if I'm feeling anxious about a like potential market dip, I should stop and ask myself, why am I feeling this way?
Mm-hmm.
Is it a rational fear based on like solid data, or is it based on a deeper seated belief that might not actually be serving me?
Exactly. That's like the heart of using feelings as data. It's about recognizing those emotions,
Right.
figuring out the context behind them, and then using that information to inform your decisions.
Okay, I'm starting to see how this works, but let's say I've identified a fear that's like based on a belief rather than on objective data. What do I do next?
Well, the next step is to like examine that belief.
Okay.
Where did it come from? Is it based on past experiences, something you read, or perhaps advice you receive from someone else?
Right.
Once you understand the root of the belief, then you can start to question its validity.
So it's about challenging those assumptions and asking ourselves, is this belief actually true? Or is it just something I've been like carrying around without really questioning it?
Precisely. And if you find that a belief isn't serving you,
Yeah.
you can start to consciously shift it
Okay.
to a more empowering perspective.
This is so helpful. But it also seems like a lot of like internal work. Any practical tips for applying this in like real-time market situations? Things can move so fast that it's hard to pause and like analyze your emotions in the heat of the moment.
You're right. It does take practice. One technique Shull recommends is keeping a trading journal.
Okay.
Not just to track your trades, but also your emotional state
Right.
before, during, and after each trade.
A trading journal, I've heard of those, but I always thought they were just for like logging buy and sell orders. How can they help with this like emotional awareness piece?
But recording your emotions.
Yeah.
Alongside your trades, you can start to see patterns emerge.
Okay.
Maybe you notice that you tend to make impulsive decisions when you're feeling excited, or perhaps you freeze up and miss opportunities when you're feeling fearful.
So imagine I've been like diligently keeping my trading journal
Mm-hmm.
and I notice a pattern. Every time I feel that like rush of excitement about like a hot stock tip, I end up buying without doing enough research.
Right.
And those trades usually go sour. That's feelings as data in action.
Right. Exactly. It's a signal to adjust your approach. Maybe you create a rule for yourself
Yeah.
that you can't buy any stock based on a tip until you've spent at least an hour researching it.
I love that. It's like creating a system to like counteract your emotional impulses. It takes the emotion out of it, at least a little bit.
Right. It's about becoming more aware of your triggers and creating strategies to manage them effectively.
Right.
Another technique is to pay attention to your body.
Okay, hold on. What do you mean by paying attention to your body?
Our emotions often manifest physically, even if we're not consciously aware of it.
Right.
You might notice a racing heart when you're anxious, a knot in your stomach when you're feeling uncertain, or even like tense shoulders when you're under pressure.
So it's like our bodies are giving us like real-time feedback about our emotional state, even if our minds are trying to ignore it.
Exactly. And by learning to recognize these physical signals, you can become more attuned to your emotions
Okay.
and start to manage them more effectively.
This is all incredibly insightful, but I have to admit, it's also a bit overwhelming. I'm starting to realize how much I've been like operating on autopilot, letting my emotions drive my decisions without even realizing it.
Don't worry, it's a process. The first step is simply becoming aware. And remember, you're not alone in this. Even the most experienced traders grapple with these same challenges.
That's reassuring to hear. So we've talked about beliefs, emotions, and even physical sensations.
Right.
What else do we need to be aware of when it comes to this psychological capital idea?
Well, in the final part of our deep dive, we'll explore how things like sleep, nutrition, and even stress management, they play a crucial role in maintaining your psychological capital
Okay.
and making sound decisions in the market.
It sounds like we're going to be talking about the market athlete concept again, that idea of treating investing like a sport.
Yeah.
That requires peak mental and physical fitness. I'm really intrigued to hear more about that.
It's a fascinating topic and one that can make a huge difference in your investing journey.
Wait, so we're back for the final part of our deep dive into Denise Shull's market mind games.
Okay.
And we've covered a lot of ground, from the limitations of numbers to
Yeah.
the power of perception
Right.
and the importance of feelings as data.
Right.
But now I'm curious about the practical side of things.
Yeah.
How do we actually put all of this into practice to become better investors?
That's where the concept of psychological leverage comes in.
Okay.
Just as financial leverage can, amplify your gains or losses,
Right.
psychological leverage is about using your mental and emotional state to your advantage in the market.
So it's about being aware of our psychological capital, right?
Yeah.
And using it wisely. And that makes sense, but how do we actually do that?
Well, Scholl, she emphasizes the importance of the mind-body connection.
Okay.
She argues that we can't make clear, rational decisions
Yeah.
if we're sleep deprived or stressed out
Right.
or running on junk food.
It's like what we talked about before, the market athlete concept, right?
Yeah.
To perform at our best, we need to be in top mental and physical shape.
Exactly. And it's not just a theoretical idea. Shull, she openly shares how neglecting her own sleep and nutrition negatively impacted her trading.
That reminds me of Hank Paulson,
Okay.
the Treasury Secretary during the 2008 financial crisis.
Oh, right.
There's this scene in Too Big to Fail where he's so overwhelmed by stress
Yeah.
that he's barely sleeping.
Yeah.
And it makes you wonder how much those sleepless nights affected his decision making
Yeah.
during such a critical time.
Yeah. It's a sobering thought, isn't it?
It is.
It highlights how essential self-care is, not just for our overall well-being, but for our ability to make sound judgments under pressure.
So we're talking about getting enough sleep, eating healthy foods, exercising regularly,
Right.
all those things we know we should be doing, but sometimes let slip, especially when we're caught up in the market's ups and downs.
Right. It's easy to neglect those things when you're so focused on making money. But remember, taking care of your physical health is an investment in your psychological capital.
Right.
It's about giving yourself the energy and resilience you need to navigate the market's challenges effectively.
Okay, so physical health is key, but what about the emotional side of things? How do we manage those feelings of fear, greed, excitement
Right.
that inevitably come up when we're investing?
That's where Shull's FC concept comes in, feeling context.
Okay.
It's about identifying the specific emotion you're experiencing
Okay.
and then figuring out what's causing it.
So let's say I'm feeling a surge of fear,
Yeah.
right? Because a stock I own is suddenly plummeting.
Yeah.
I need to pause and ask myself, is this fear justified based on the company's fundamentals?
Right.
Or is it just a knee-jerk reaction to seeing my portfolio value drop?
Exactly. Is there a rational reason for this fear
Right.
based on the available data, or is it stemming from some deeper seated insecurity or past experience?
And once I understand the context behind the fear,
Right.
I can start to manage it more effectively. I can either adjust my position if the fear is justified, or I can ride out the volatility if I believe the fear is irrational.
Precisely. By bringing our emotions into conscious awareness, we can prevent them from hijacking our decision making.
That makes so much sense. But even if we understand our emotions,
Yeah.
it can still be tough to control our impulses,
Right.
especially when the market is moving fast and everyone seems to be making money except for you.
You're absolutely right. And that's why Shull also talks about the importance of developing a risk-first mentality.
Risk first.
Yeah.
But isn't the whole point of investing to make money? How can you be successful if you're always, like, focused on what could go wrong?
It might seem counterintuitive, but Shull, she argues that the the most successful traders are actually the ones who prioritize risk management above all else.
Okay.
They're not afraid to walk away from a trade if the risk reward ratio isn't favorable,
Right.
even if it means missing out on a potential profit.
So it's about playing the long game,
Hmm.
protecting your capital,
Right.
and only taking calculated risks when the odds are in your favor.
Exactly. And that requires a certain level of emotional resilience.
Yeah.
It's about being able to control your impulses,
Right.
stick to your plan,
Right.
and not get swayed by the fear of missing out or the euphoria of a winning streak.
Okay, that makes sense. But how do we actually, like, cultivate that emotional resilience? It's not like they teach that in school.
Well, there are a number of techniques Shull recommends.
Okay.
One is mindfulness,
Okay.
becoming more aware of your thoughts and feelings in the present moment.
So, like, we're talking about practices like meditation,
Right.
deep breathing,
Yeah.
or simply taking a few moments to pause and
Right.
check in with yourself
Yeah.
before making a trade.
Exactly. Those practices can help you become more aware of your emotional state
Okay.
and less reactive to market events.
I like that, bringing that sense of, like, mindfulness into investing.
Yeah.
It's almost like treating the market like a meditation practice in itself.
Right. And another technique is to develop a pre-trade routine.
Okay.
This could involve reviewing your trading plan,
Right.
analyzing the market data,
Right.
or even just taking a few minutes to like clear your head
Yeah.
and get into the right mindset before you start trading.
So it's about, like, creating a sense of structure and control, right?
Right.
In an environment that can, like, feel inherently chaotic,
Mm.
I can see how that would be helpful, especially when things are moving fast.
Right. And finally, Shull, she emphasizes the importance of learning from your mistake. Every trade, whether it's a win or a loss, is an opportunity to learn and improve.
So we should be keeping that trading journal we talked about earlier.
Right.
Not just to, like, track our emotions, but to analyze our past trades and look for patterns in our behavior.
Right.
If we notice that we tend to make the same mistakes over and over again, that's a sign that we need to, like, adjust our approach.
Exactly. It's all about continuous learning and improvement.
Wow. This has been such an eye-opening deep dive into market mind games.
Yeah.
It's really made me rethink my entire approach to investing.
I'm glad to hear that. You know, it really is a fascinating and empowering book.
It is. Before we wrap up, are there any, like, final takeaways you'd like to leave our listeners with?
Well, I think the most important takeaway is that the market is not just a game of numbers.
Right.
It's a human game
Right.
driven by emotions, beliefs, and perceptions.
And that means we need to understand, like, not only the market itself,
Yeah.
but also ourselves. We need to become aware of our own psychological biases, develop strategies for managing our emotions, and prioritize our physical and mental well-being.
Beautifully put. At the end of the day, our greatest edge in the market, it isn't our intellect
Mm.
or our access to information,
Right.
but our ability to master our own minds.
And on that note, I think we've reached the end of our deep dive. Thank you so much for joining us on this journey into the world of market mind games.
It's been a pleasure exploring these ideas with you.
And to all our listeners out there, keep diving deeper,
Yeah.
keep learning,
Right.
and keep exploring the fascinating world around us.